สวัสดีครับ
Good morning, everyone. Good morning, investor and analysts. We Thai Oil Public Company Limited. We're gonna present you about the first quarter of the financial performance and also the market outlook. Myself, Tharika Thepasadin Nathiya, Vice President of Financial Planning. On my left-hand side, Mr. Nathapon Noparatwong, Commercial Planning Manager, Global Market. And my right-hand side, Kun Churiyon Lienglunlom, Assistant Manager, Investor Relations of Thai Oil. So now we start for the first question. For the first session, we start with the highlight and then financial performance, and then the last one is should be the market outlook. So we start the first one. I would like to recap you about the business structure of Thai Oil. For Thai Oil, you can see the left-hand side is a refinery. Refinery, actually, PTT hold as 48% of share, and another half is a free float in the market. Our capacity is 275,000 barrels per day, and we located in the Sriracha province. We have the 22% of share of the total capacity of Thailand. We procure the crude from the Middle East and also from the rest of the world. Our petroleum product is mainly middle distillate is around 60%, and the gasoline around 20%, and for the fuel oil is around 7%. Our product is 80% is petroleum sell to the market, and around 20% we sell to our subsidiary to produce the high value product. For the Performant, around 20% we send to the Thai Paraxylene to upgrade to the PX and benzene. We produce PX around 500 kt per annum, and benzene is around 259 ton per annum. And for the wrong residue is a heavy part. We send to the Thai lube base. We produce the lube base oil and also bitumen. These three sections of the business is provide net profits around 85%. And also we have the power business is contribute to the net profits around 15%. Is power generation. We have the two small power plant. We call Thai Oil Power and Top SPP. It's produce electricity is around 357 megawatt hour, and also steam is around 712 ton of steam per hour. These two power plant is support steam within Thai Oil, and also for the rest of the electricity we sell to the grid. We also hold the share in GPSC is around 24%, and for the rest of the business is a support business like Thai Oil Marine and Thai Oil Ethanol. And that's the brief of our company structure. Then we will move to the key highlight in the first quarter. For the first quarter, you can see that the margin for the core business is slightly softened from the Q4 last year. For the refinery, you can see that the GRM is report $3.0 per barrel. The main soften is from the petroleum product like gasoline is weakened from high inventory, and also our middle distillate is also softened due to mild winter. But it partly compensated by the crude premium that are lower than Q4. In Q1, we report it as around $1.8 per barrel. And also for about the Dubai price, in the first quarter is a shoot up that we enjoy the stock gain, inventory gain around $2.7 per barrel. The crude gain because of the OPEC and non-OPEC production cut to 1.2 million barrel per day from the October level. In October level is around 26 million barrel per day. For the second business, it's the aromatics. Aromatics is also softened. It's contribute to the GRM is allowed to $2.0 per barrel. It's because of the increasing in supply from Petrolabic and also Nisong with full capacity and additional supply from China. For the lube-based business is also softened. Its contribution to the GRM is around $0.2 per barrel. The main reason is from base oil group 2 and group 3 that pressure our product is a group 1. So when combine the three margin of the core business, we report the GIM is a $5.2 per barrel. It's a softened from Q4, but we gain the stock gain $2.7 per barrel. So we report the accounting GIM is $7.9 per barrel. For the key highlight, in first quarter, we report the net profit in the first quarter 4.4 billion baht, which half of that is a stock gain that I told. The key achievement in the first quarter, for the first part, we have the reliable production. We can run the high utilization of refinery and around 116%, and also we can run high aromatic and base oil at 92% and 89%. That we can capture the local market. That in the first quarter we can capture the local market, and in Indochina it's around 97%, and for the rest we export to other countries like Singapore around 3%. For the key activity in the first quarter, we also get the approval for the ERU carve out. ERU is a refinery energy recovery unit. That is a unit in the CFP project that we also already get the approval from the EGM last year. For the carve out, we get approval in the AGM in April. For the carve out, we carve to GPSC. The value is $757 million. The ERU is the energy unit that produce electricity and steam to support CFP. That produce electricity around 250 megawatt, and also steam is around 175 steam ton per hour. That support for the CFP. For the carve out, is a benefit is to reduce the capex and also the enhance the return after carve out. And this project is already signed with the GPSC in May. For the rating, we also get the uplift from the S&P. For the rating for the S&P, we are now at the BBB plus with a stable outlook. We get the uplift from the PTT standalone, that uplift in 7th of May, and also the Moody we can maintain rating as a Baa1 with stable outlook too. For the portion of the business, you can see that around 87% of core business, and around that's only 2% of other business. For the margin improvement, actually, and we also realize that the market is quite fluctuated from time to time. For our company, we also have the margin improvement to improve the margin, and also have the program for the cost reduction. For the margin improvement, we try to enhance crude to try to procure the crude from the cheaper source, and also we try to reduce the cost like operating cost. Like we have the campaign for we call internal that orchestra and also symphony to reduce the operating cost, and also reduce the finance cost, and also we have the tax planning. Then we will move you to the performance result in the first quarter by Kun Turiyon.
Okay. For the financial performance in Q1 this year, I will go through three main business units: refinery, aromatics, and lube business. And then I will focus on the key figures or key highlight in financial statement. Okay. Look at the refinery production first. In the upper left graph, you will see that we maintain our run rate at high and reliable level since 2018 until now. And in Q1, we still run high at 116%, which was a quarterly high record. And the reason that we maximize our run rate is that we would like to satisfy the growing demand in Thailand. And look at the industry utilization rate at 98%, and this rate was quite high, as well as the Asia Pacific run rate as around 95%. What it means is that the incremental supply relatively tight. If demand sharply increase, this could be a good signal for our refinery margin. And look at the Thailand oil demand is still growing year on year with a total growth of 2.2%, led by the growth of gasoline demand at 3.4%, and jet fuel at 2.2%, and diesel at 1.6%. And in terms of commercial, we try to sell in domestic market and export to Indochina market, Cambodia, Laos, Myanmar, and Vietnam as much as possible. And in Q1, we sell to local at 87% and CRMB at 10%, and only 3% that we export to other countries like Singapore, Hong Kong, and China. And in terms of customer, our big customer is PTT. Around 50% of our petroleum product we sell to PTT. But we also sell to other domestic customers like PTG, Shell, and Chevron, and Bangchak as well. Apart from the production and sale, now we will look at the gross refinery margin or GRM. And in Q1, we reported GRM at $3 per barrel, lower than the previous quarter at $3.9 per barrel. And the lower GRM mainly because of the lower product spread, especially middle distillate spread, jet fuel and diesel. And the reason is that the heating oil demand was lower than expected due to the mild winter. And also gasoline spread still going down as well from last year. But if you look at the crude premium in Q1, the crude premium reduced from $2.5 per barrel in Q4 last year and decreased to $1.8 per barrel in Q1 this year. And this partially helped our GRM to pick up a bit. And in terms of crude price, you will see that the Dubai price increased from December last year at $57 per barrel and rose to $67 per barrel, $10 per barrel increasing. So in Q1, we had a stock gain at $2.7 per barrel, or approximately 2.4 billion baht, or around $78 million. Altogether, in Q1, we had a market GRM at $3 per barrel and add up with a stock gain at 2.7. So accounting GRM would be $5.7 per barrel, higher than the Q4 last year at minus $3.6 per barrel. Now look at the aromatics business. In Q1, aromatics business slightly softened Q1Q. The contribution lower from $2.2 per barrel to $2 per barrel. And the lower contribution mainly from the lower PX spread. As you see in the table, the PX spread slightly going down. This is because of the increasing supply, mainly from the aromatic plants in Saudi Arabia and Vietnam. And if you see the benzene spread, the benzene spread was not quite good as well. The benzene spread was still weak since last year, mainly because of the oversupply and the high benzene stock in China. And in terms of production, aromatic production in Q1 slightly reduced to 92%, but 92% is still in the quite high production. Look at lube business. In Q1, lube performance was softened. The contribution was lower from $0.4 per barrel and decreased to $0.2 per barrel in Q1. And this because of the lower base oil spread. As you see in the table, the base oil spread going down due to the base oil supply Group 2 and Group 3 that coming in the market, mainly from China. While the bitumen spread was not good either due to the low demand in the winter. And in terms of lube production, in Q1, lube business ran higher to 89%. It's like a production as a normal level of lube base. And And another business that can help strengthen our main business and also contribute profitability to our group is power business unit. And in Q1, power business contribute around 482 million baht, account for 10% of total net profit. And half of that was the profit from our own SPP, Thai Oil Power and Top SPP. And another half what we recognize from the profit sharing from GPSC, which we held around 24%. And this portion from GPSC was higher from Q4 last year, around 100 million baht, due to the higher consolidated net profit from GPSC after GPSC acquired Grow in mid-March. Move to the margin and cash cost. I will begin with the margin on the left side. In Q1, market GRM was at $3 per barrel, as I mentioned before. And we top up with the contribution from aromatics and lube base at $2.2 per barrel. So gross integrated margin or GIM was at $5.2 per barrel or $7.9 per barrel with stock gain included. And now look at the cost side. Refinery cash cost was $1.7 per barrel, consists of $1.2 from operating cash cost and another $0.5 from net interest expense. I would say that at this level of cost, I mean at $1.2 per barrel, is considering as a competitive cash cost compared to other refinery in the regions. And Thai Oil, we are the refinery that we are in the first quartile in terms of lower cash cost. And moreover, if we add up aromatics and lube-based business, so our group cash cost would be $2.3 per barrel, increased by $0.6 per barrel. And you compare this incremental cost with the incremental margin at 2.2. And this shows that the incremental margin greater than the incremental cost quite a lot. And this reflecting the benefit of fully integrated refinery of Thai Oil. And look at the performance breakdown by business unit. In terms of utilization rate, all business units maintain at high and reliable level, especially three main business unit, refinery, aromatics, and lube base. And for the net profit contribution in Q1, we reported consolidated net profit at 4.4 billion baht, mainly derived from three main business units at 3.8 billion baht, or account for 85% of total net profit, as Kun Tharika said. And another 10% of our profit was from power sector, and the rest 5% is from the other business like solvent and marine. And now look at the financial statement. Start with P&L first. I will focus on the key figures. And in Q1, we had EBITDA at 6.9 billion baht, higher from Q4 last year, mainly from stock gain at $2.7 per barrel in Q1, compared to the stock loss at minus 7.5 in Q4 last year. And other items in this quarter, such as financial charge, 1.2 billion baht, higher Q1Q due to the interest expense from the new bond that we issued at the end of last year. And also we had a gain from FX, 652 million baht, higher Q1Q due to Thai baht appreciate. And we have the tax expense 1 billion baht, or effective tax rate around 18%. And lastly, in Q1, we reported net profit at 4.4 billion baht, or account for earning per share at 2 baht and 16 stang. Next, in terms of cash flow statement in the first 3 months, I will start with the beginning balance, 107 billion baht. And in Q1, we had a net cash that derived from the operating activity, 3.8 billion baht. And the second activity, we had cash derived from the investment activity, another 7.8 billion baht, consists of the short-term investment 11 billion baht and the capex spending at 3.4 billion baht. And lastly, cash used in financing activity, another 5.2 billion baht, mainly from loan repayment, 3.8 billion baht, and interest payment around 1.4 billion baht. And we net off all activity together. So in Q1, cash will reduce 5 billion baht. So ending balance was 102 billion baht, or around $3.2 billion equivalent. And lastly, in terms of balance sheet or financial position, we are in the strong position. As you see, our asset side is quite big. At the end of Q1, we had a total asset at 272 billion baht, or around $8.2 billion equivalent, consists of cash and short-term investment around $3.2 billion, or almost 40% of total assets. And we tend to reserve this cash and short-term investment for our big project CFP, which cost of project around $4.8 billion, and we will have the obligation to pay around $3 billion in these 2 years. And on the other side, in terms of debt, we had a total debt around $3.2 billion. And look at the structure of debt. Loan and bond in USD account for 63% as expected. Thai Oil, we are the natural hedge company. So the intention to manage the exchange rate is to have the US dollar in loan. And the portion of loan and bond in Thai baht account for 37%. And the cost of debt was 4.8%. By offsetting with the interest income, net cost of debt will reduce to 2.4%. And from the strong financial position, the credit rating still affirm our rating at investment grade. And as Khun Thanlika said, in early May, S&P credit rating just uplift our rating from BBB to BBB plus with stable outlook. And next, Khun Nathapon will go through the market outlook in second half this year.
Then I'll talk about the market outlook for the second half of this year. So I'll go through crude oil price outlook, refining market, aromatics, and base oil. So let me start with oil price outlook. We expect that the market in the second half could be slightly softer than the first half because the OPEC will try to increase their supply in order to balance supply shortfall from Iran and Venezuela. And also the US producer will continue to raise their production in the second half after they complete the export pipeline in Q3. For the first part, since October last year, OPEC has committed to cut production in order to balance the market. It's actually cut the supply for 800,000 barrels per day. And so far this year, OPEC has been performing the cuts very well. So it's actually cut more than expected. Also, Iran and Venezuela production has been declining due to US sanction. So in the second half, we expect Iran to production to be 500,000 lower than last year, while Venezuela production will drop over 1 million barrels per day. And this brings the OECD crude oil inventory to the 5-year average as OPEC planned. So going forward, we need to watch the supply from non-OPEC. So in the second half, we believe that non-OPEC supply will increase over 1 million barrels per day, mainly from the US. So the US will complete their pipeline expansion in the second half of this year. So we can see that their pipeline will increase nearly 600 1,000 barrels per day in the second half. So that helped the producer to increase their production more easily and export the surplus into the market. And the key event that we need to watch this month is the OPEC meeting in late this month. They will decide whether to reduce the cut or to maintain the cut. We expect that the OPEC should increase their production slightly from the current target because of the shortfall from Iran and Venezuela. So we have two cases. The first one, OPEC increased the production to the baseline, which is the October 18. So the market will turn to be slightly surplus in Q3 and Q4. But if OPEC maintain their cuts and increase just slightly from the current level, the market should stay in the balance situation in the second half. Next, I move on to refining market. For Singapore GRM has been very weak in Q1 due to the softness in gasoline market. The gasoline crack over Dubai dropped to a very low level at below $4 per barrel in Q1 due to weak demand and also the rising supply from the increasing runs of the light crude. And in Q2, the market remained quite soft due to the weak in middle distillate demand because of during the first half of this year, the winter has been very mild and demand for heating oil dropped quite a lot. But going into the second half, we are approaching summer driving season in the US, and that will help to support demand for gasoline. And for the middle distillate cracks, we will enter the peak season in Q4 and also the upcoming specification change for IMO for bunker fuel that will change the sulfur specification from 3.5% to 0.5% in 2020. This will help to support demand for marine gas oil. For gasoline, since the beginning of this year, the inventory has been very high due to the reason that I mentioned earlier. But in Q2, the inventory is dropped to around 5-year average due to refinery already reduced the run during their peak maintenance in Q2. But going into Q2 and Q3, we'll see more demand from the US during their peak driving season. So the demand usually increase over Q on Q, over 500,000 barrels per day. And for the supply side, we'll see a little bit of headwinds for new refinery startup, mainly in China and also Saudi Arabia later this year. So we can expect some pressure from Chinese export going into the second half. For middle distillate margin, we think that this year it could be a chance that the winter could be colder than normal, according to the latest forecast. And going into Q4, as I mentioned earlier, we are approaching the specification change for IMO. There will be more demand for bunker use. And also the inventory of middle distillate at the moment is quite at average level. So when demand pick up, we could see some response in prices. But the headwinds again could be some from Chinese export because the refinery already ramp up their runs, and the high level of the Chinese export could be quite stable in the second half. If we look over the year, the net capacity addition in the region, which shown in the bar chart, is slightly lower than demand growth is the area behind. That will support the refining market going forward. But in the short term, because there are some refineries starting up at the moment. When they ramp up the run to nearly full capacity in order to test the unit, we could see some pressure in the market. In Thailand, the demand for this year has been quite steady. For the more gasoline has been growing around 3%, and we expect gasoline in the second half should be quite steady. For the middle distillate, jet fuel growth has been slower because of the weaker tourism and also limited airport capacity. For diesel in the second half, we could expect it to grow about 1-2%, similar to the historical average. In total, the demand for petroleum product could grow around 2-3%. Then I move on to aromatics market. For the PX, since the beginning of this year, there's been some capacity addition coming online. So the market in the second half could be pressure due to the supply from China. While benzene also some concern about new capacity and also inventory in China market. For PX in the second half, we'll see a lot more capacity addition. So a net capacity addition in the second half will be around 3.6 million tons per annum, while the demand usually grow around 3 million tons. So we could see a little bit of market surplus going forward. Also, the PX plant turnaround in 2019 is quite lower than last year, so it could be another pressure as well. For the operating rate of the downstream, which is PTA, is quite strong at above 90%. This could be a supporting factor that help to support the surplus in the region. For benzene, new capacity of benzene come along with PX plants. So the second half, there will be around 1.1 million tons of benzene addition in the region. And also, if you look at the benzene inventory in China, it touched at very high level because of the weak demand. So that will also pressure benzene market in the second half. For base oil, we usually look at the spread between 500 SN against high sulfur fuel oil, which is the indicator of the margin of Group 1 base oil plant. The spread between these products been weakening since the beginning of this year due to the capacity addition in the region. So in the second half, there will be around 1.4 million tons per annum capacity addition coming online. And also, we can see that the plant maintenance in the second half could be lower than the first half. So the market for base oil could be slightly pressured. For bitumen in the Q2, the market is quite strong due to the strong summer demand, and also the activity in the road paving is quite firm. But going into the second half, we could see some slower demand from rainy season, and also the import volume from some country could be lower. And the LAB is linear alkyl benzene is used for detergent business. The spread against benzene has been quite steady, around $620 per ton. And going into the second half, there could be some headwinds from demand side because we are entering rainy season, and usually demand for detergent drops slightly during this period. In conclusion, for oil market outlook, we think that the supply will be increased slightly from OPEC member to balance the Iran and also Venezuela production loss, and this will pressure the market slightly in the second half. For the refining market, we could see some improving in the margin thanks to the strong middle distillate demand going into the IMO spec change later this year. For aromatics, both PX and benzene could be pressure from new capacity in China. For base oil, because of capacity addition in Asia and also soft demand during rainy season, this could pressure the market slightly. And for LIB, because of the lower seasonal demand in Q3, there could be some pressure as well. And this concludes our presentation today. So we move on to the next session, which is the Q&A.
So we got some question, yeah, and okay, I will start with about the question is what is a long-term ROE and how to achieve that. And for Thai Oil now we have the big project that we call Greenfield Project or CFP. For CFP we have to invest around $4.8 billion, and some part is already carved out for the ERU. The investment is around $4.1 billion. That one will increase our GRM. Because of this project, we will convert our fuel oil that now we have a 7% to 0, and to upgrade to middle distillate. It means that our GRM at current level will be uplift. So for the ROIC nowadays, or as at last year or as at Q1, is around 7 to 8%. So if we have the CFP in the next 4 years, we have the CFP will COD in the first quarter in the next 4 years. So until then, the GRM will be uplift. So the R is mean the return will be higher from the current level. And for the fund, that do we have the plan to raise the fund? So far, we have the project just only the CFP, that the big one. We have already the cash on hand around $3 billion. That means we already raised the fund around $1 billion last year, and for the free cash flow that we come for the next 4 years, it will be enough to fund the project already. And for the question about the potential of the strengthening of the baht, how to impact to Thai Oil. For the strengthen or weaken of baht, it will impact our EBITDA and also the debt that we have in the USD. For the strengthen for the EBITDA will be softened, but we will gain from the translation gain from the USD debt that we have. Actually, we have the like a natural hedge company, because the revenue and the cost is come from the dollar link. So it means for the strengthen or the depreciate of baht, we have the one gain one loss. So it's natural hedge in our P&L. And for the next question is about the margin between export and domestic.
Okay, so I will quick answer on the margin, domestic sale and export sale. What is the difference? I would say that the domestic sale margin was a bit better than the export sale due to the reduction in the transportation cost. So if we sell in the domestic sale, we will have a much better margin than the export sale. So that's why we try to maximize the domestic sale and lower the export sale to other country. However, if we sell to the export to the country like CLMV, Cambodia, Laos, Myanmar, and Vietnam, we can use the domestic sale as a price as well. So we will maximize the domestic sale and the export sale to CLMV. Okay.
And for the question, what's your view on the world trend toward cleaner energy?
For the cleaner energy is next trend for energy. So I go to product by product. For the upcoming event that will be very important, which is the IMO specification change. Over next year, the bunker demand that we use to fill up the chips will be changed from 3.5% sulfur to 0.5% sulfur, and this will affect a lot in the refining industry, because when we need to lower the sulfur, then usually the fuel oil part is very difficult to make a lower sulfur. So basically refineries and also the a trader will blend more metal distillate, which is the diesel, into fuel oil to make lower sulfur. And this will increase the demand for the cleaner fuel, which is the diesel, and reduce the dirty fuel, which is the high sulfur fuel oil. But for the transportation, like the cars and also airplanes, the key things in the future would be the efficiency in the engine that will help to reduce the consumption of the demand in going forward. But for car in particular, we'll see that there will be more electric vehicle penetration over the next 10 years in order to use energy cleaner and maybe more efficient. But this will take time because usually the car sales is around 10% of the total car fleet globally, and it needs time to change all the car on the streets. So we believe that the car sales will gradually increase and will change to electric vehicle, but it takes over decades to replace all the cars on the street.
Okay, thank you for your question. So we end our session for the Q1, and thank you very much. If you have more questions, you can contact IR team for email or you can call our team. Thank you very much. สวัสดีค่ะ